A lot of new people are buying cryptocurrencies, which means that the total value of all crypto assets hit $2 trillion for the first time in September this year, which is 10 times more than when the market was first started in early 2020. CoinMarketCap data lists more than 15,000 cryptocurrencies. By 2030, the industry is expected to have a global market value of $4.94 billion. It is expected to grow at a compound annual growth rate of 12.8% from 2021 to 2030. Beyond the numbers, crypto is also attracting a younger group of people who are interested in it. A study by the University of Chicago's National Opinion Research Center, NORC, found that most cryptocurrency traders are younger than 40 years old. There was also a report from BTC Markets that showed that there was a 24% rise in the number of 18 to 24-year-olds investing in cryptocurrency in the 2020-2021 financial year. During the 2020-2021 financial year, new female users signed up for the BTC Markets cryptocurrency exchange more than twice as often as new male users did. The NORC study also found that 62% of people say they don't understand crypto, and 31% say this is why they don't invest in it. Analysis is important for making predictions. So, how can investors figure out how much cryptocurrency prices will go up or down? The idea that crypto prices move in a straight line is an oversimplification of the factors that affect a coin's value. Cryptocurrencies can rise and fall quickly in price. Analysis. You might be wondering what kind of analysis you need to use and how cryptocurrency markets are affected by both small and big picture factors. There might also be questions about how variables affect value. The whole process of fundamental analysis is shown in this video, and we show it through a forecasting lens so that you can learn how to predict which cryptocurrencies are going to rise the most. How to predict cryptocurrency prices. There are three main types of analysis that have been used in the world of finance for a long time now. In the 18th century, merchants in Japan came up with the first candlestick charts to help them understand and predict rice prices. Financial analysis can be done in three main ways. It looks at statistical trends based on things like price movements, patterns, and charts from the past. It also looks at the market's long-term history. Technical analysis is the study of statistical trends based on things like price movements, patterns, and charts from the past. It's used with other types of analysis, like fundamental and technical. Investors can do quantitative analysis by using financial ratios like earnings per share, EPS, or discounted cash flow to figure out how much a company is worth, DCF. For people who want to know if a crypto will rise or fall, fundamental analysis is a great tool. It looks at future projections instead of price charts, which show past events. Fundamental analysis could help people make long-term investments by allowing them to figure out how much a cryptocurrency is worth based on a wide range of information. What is fundamental analysis? Fundamental analysis is a way for investors in the financial markets to look at and study the things that make things worth more or less. You can figure out if the price of a cryptocurrency is too high or too low by looking at its intrinsic value. This can be done by looking at things like the state of the economy, how the cryptocurrency market is doing, how the crypto company is run, or how much money it has. Fundamental analysis. If you've ever looked at the basics of a cryptocurrency project, like its market capitalization or the value of its native token, then you've done this. The main difference between fundamental analysis and technical analysis is that the former doesn't look at things that can be seen right away, like historical market data or price charts. Instead, it looks at factors that are less tangible and more subjective, like how people think about things. Fundamental analysis looks at the big picture, taking into account as many factors as possible. Technical analysis, on the other hand, looks at price action and historical trading volume to help investors find short-term trading opportunities. The goal of technical analysis is to find trends that come before the fundamental trend. Fundamental analysis fans believe that there must be a link between fundamental factors and price changes. This is a good thing about fundamental analysis because it looks at things outside of the market and how they could affect the performance of cryptocurrencies in the markets. The mechanics of fundamental analysis. In order to learn how to predict the trends in cryptocurrency, you'll need to get used to two different types of fundamental analysis. People use the first one more than the second one, which is a bottom-up method. It looks at things like the economy, interest rates, inflation, employment, and gross domestic product when making decisions, GDP. A bottom-up approach doesn't pay as much attention to macroeconomic and market cycles as it does to microeconomic factors like financial earnings or a company's revenue. Cryptocurrency fundamental analysis follows the same rules as other markets that have more traditional assets like stocks. People don't pay as much attention to a company's financial statements, balance sheets, or how well it has done financially in the past. Investors who want to learn how to predict crypto market trends should look at the following instead: cryptocurrency market capitalization, circulation supply, and total supply of tokens. Token utility and use cases. Community size, which is an important factor in getting more people to use cryptocurrencies. The crypto project's leadership team. The token's trading volume. Listings on big crypto exchanges. Partnerships with trusted institutions. The latest news about the coin. You need to know that no single metric can give you the whole picture of a cryptocurrency investment. It's better to look at all the information above to get a more complete picture of a project and how the price of a certain cryptocurrency might change. You can also look at a company's white paper to get a bigger picture. You can also look at blockchain metrics, which show important things about a cryptocurrency's technology and processes. How many computers are used to mine and process transactions on a blockchain is called a hash rate. There is a proof of work algorithm for Bitcoin, for example, that uses cryptographic hashing. Investors who don't want to mine for Bitcoins have been known to show this by having lower hash rates. When doing fundamental analysis for the purpose of predicting the movement of cryptocurrency, you can also look at things like user adoption rates and media coverage. People who follow crypto news can learn a lot about how people think about a cryptocurrency and how companies plan to use it, which could help or hurt its growth or fall. All in all, any news about the development of the cryptocurrency project or the wider economy can change fundamental analysis-based estimates. A financial analyst at Inves told me that when predicting the price of a cryptocurrency, you need to take into account its scarcity, mainstream adoption, and government regulation. This is what he said. Don't forget to subscribe to our channel.